Virgin Australia has just gone into voluntary administration. Reporter George Roberts joins us now from Brisbane. George, good morning. So take us through this statement.
Well, Joe, it has confirmed this morning, Virgin Australia has confirmed that it has gone into voluntary administration. It has appointed a team of administrators from Deloitte, and they will now take over the business and see what they can do to resurrect it. In a statement to the ASX, Virgin said that this move means that it can recapitalise and help ensure that the business is in a stronger financial position on the other side of the COVID-19 crisis. Now, as we know, this business entered the coronavirus crisis not in a great position. It was debt-laden with about $5 billion in debt. It was going to the government asking for a $1.4 billion loan to try to help it survive through the travel shutdowns that are designed to stop the spread of the coronavirus. And we know already it has laid off 1,000 staff. 8,000 of its 10,000 direct employees have been stood down, and it has another 6,000 contractors. So there are 16,000 livelihoods that are due to be impacted or affected rather by this airline. Now it will be flying for now, and the federal government has given $165 million to Qantas and Virgin to keep key routes running through the crisis so that those otherwise unprofitable routes can still keep going ahead, ferrying people around the country where necessary. But for now, the future of Virgin hangs in the balance. The administrators will come in, they'll look at how they can either restructure the organisation, sell parts of it off, find a backer, a merger, or in the worst case scenario, perhaps strip back some parts of the business and sell them off. So certainly a very a dire and disappointing situation at the moment for Virgin, but Virgin management maintaining that it should emerge from this in a stronger position, but that remains to be seen, Joe.
And George, how big a presence does Virgin have there in Queensland?
Well, more than half of those 10,000 direct employees are based here in Queensland. And of course, that harks back to when the Beattie government gave a $10 million inducement to Virgin. When it started off, it launched as Virgin Blue. You'd remember more than 19 years ago, I think it was in August in the year 2000 that it launched. So nearly 2 decades ago, rather. It launched as Virgin Blue. It came onto the scene as a sort of vibrant company, which Virgin is known for. That brand is known for being, vibrant and nimble and, friendly. It sort of offered a new alternative, and we saw Ansett collapse, obviously. So this situation would remind many people of the collapse of Ansett, and gradually Virgin Blue built up to be a competitive offering in the skies versus Qantas and Jetstar. But look, it has been languishing over recent years. More than a decade, the share price has been languishing, and it closed at just 8.6 cents a share last week. If you look back to 2007, it was trading at $2.12. So really a very low share price. So investors not showing much confidence in the value there in the company. And of course, as we mentioned, that debt, the $5 billion worth of debt. So administrators now have the task of seeing what they can do, what they can resurrect from this company. But thousands of direct jobs, of course, on the line here. And the industry says that there's the flow-on effect of the tens of thousands, if not hundreds of thousands of jobs in the tourism sector that rely on having another major carrier in the sky.